Welcome back to the channel, boys and girls. This week, we're going to talk about one of the most popular questions I get asked. What's a better entity for you? There's S corporations, C corporations, LLCs, sole proprietorships. It can all be confusing. Let's jump into it. Let's go. So a big asterisk right now before we jump in, I'm not going to throw a lot of legal terms at you and I'm not going to overcomplicate this. I looked at some videos online and there's a resounding similarity to all the videos. They're generally not attorneys, they're generally not tax professionals, and they're usually somebody younger just throwing out a bunch of legal terms at you they don't even understand. So we're not going to do that. The caveat I'm going to give you about all this, though, is this is for entertainment purposes because me as an attorney can't be giving away free legal advice without having repercussions. So this is all entertainment value. Consult your own tax professionals and attorneys for whatever you ultimately decide to do. Now that we got that out of the way, let's talk about your business. You started a business and you want to protect yourself. There is the option of being a sole proprietorship. And basically that means it just shows up on your tax return as extra income for you. And some people say, well, I don't want to be, John Smith or, Jane Doe running a business. I want to have a professional name. You can file something called a fictitious business name with your local county clerk recorder's office. So you can be John Smith or Jane Doe doing business as, John's Flowers or Jane's Donuts, whatever you want to be. And that actually runs straight through to your tax return as just extra income for you. I will say I typically do not recommend that for most people. And the reason why is you don't get asset protection in that structure. If somebody sues the flower shop or the donut shop, guess what? They're suing you personally. That means your house and all your other assets, assuming they're not protected with a trust, those could get, hit in a lawsuit. So you don't want that to happen. You want to protect yourself to the extent that you can. So I always tell people S Corp or LLC or C Corp, depending on your desires. And this is where a lot of videos online get things really, really wrong. You want to protect yourself, you got to know you can pick any one of those vehicles, and as long as you don't do something called piercing the corporate veil, meaning you don't commingle funds and use them for personal use however you want to, and you honor the structure and the integrity of the business, you're not able to get sued for your personal assets. You protect yourself. But there's a lot of people who go into those entities, and what do? They take money out whenever they want to, they spend it however they want to. You need to get used to paying yourself a salary and distributions if applicable. Now let me explain what I mean by all that. For most people who are watching this video, you're going to pick one of two entities, an S corporation or an LLC, a limited liability company. The S corporation has a different tax basis than the LLC. Almost all real estate owners who buy and hold real estate go with an LLC because it has a better passive tax basis. But you don't have employees. What they do as real estate owners is they take distributions out, usually once a year, and then they keep it in the company. They can keep it in the company for the next year to reinvest if they want to, or they can take it out in the form of distributions to themselves and avoid employment tax income. That can range pretty significantly, but I want to say it's about 15% on average they can save by having that tax structure. And the reason why I continue to talk about taxes is you're going to find that other than some legal exceptions, the almost constant resounding theme you're going to have when it comes to picking an entity is what works for a tax basis for you, not from a legal one. People often confuse the legal nature of these entities with the tax nature. And frankly, the tax basis reason for what you're going to pick is way more important than the law side. I know there's a lot of lawyers who are going to watch this, who are going to get real pissed off at me for saying that and downplaying what they do, but it's the truth. You want real entity advice? Go talk to your CPA about what you're doing for a living. So an S corporation, for example, winds up being a great thing for a sole proprietor to go into once the company's got big enough. And you can name it whatever you want. You can name it John Smith Incorporated or Jane Doe Incorporated. And you can also use that same fictitious business name to be DBA John Smith's Flowers or Jane Doe's Donuts. You can do whatever you want as far as the name goes, but the S corporation structure allows you to pay yourself a salary as an employee and then also take distributions. The salary you pay yourself has to be, quote, reasonable for a similarly situated person doing that job for the company. So if you're doing the job of somebody who makes $80,000 a year, but the company makes $300,000 a year, you pay yourself $80,000 in basic salary, and then you take distributions for the remainder of the profits that are in the company. And if you're taking out the profits every single year, it's almost always going to wind up being an S corporation for you. And by taking out, I mean, if you want to pay yourself all the money that that entity earned, because that's all income you want to take home, that's an S corporation. C corporations are generally bigger companies. They're a little bit more complex. And the benefit to a C corporation is you can have those retained earnings you don't actually give back out to yourself or the shareholders, And what you do with those earnings are you have the ability to reinvest them over time. So think larger corporations that are publicly traded, stuff like that. Those are usually C corporations because they have a much more complex structure. For an LLC, one of the main confusions is people think that you need to have multiple people in a limited liability company. You don't necessarily need that. You can actually have a single member limited liability company, but you are a member manager. It doesn't have employees in the traditional sense, and that's what gives it that passive income tax benefit. However, in states like California, there are some limitations you have to be aware of from a legal perspective. A great example is professional licensing in California. You cannot have under an LLC. So if you want to be a real estate broker, and you want to have a company that goes out and does, whatever it is you do. My company, for example, Black Crown, which has property management and real estate services, I can't use my real estate broker's license under an LLC. It must, under this state's law, be a C Corp or an S Corporation. Now, my law firm, Black Crown Law, APC, that's a professional corporation. It's a specialized version of a corporation where only attorneys can be owners because the state doesn't allow other non-attorney individuals to own portions of a law firm. I say all this to you to give you kind of a broad context, and I'm going to leave you with one last thought to make this complicated entity structure very, very simple. If you're going to file for an S corporation or C corporation, they're effectively the exact same thing other than the document you file with the IRS electing an S corporation status. You're going to need articles of incorporation you file with the state. You're going to need bylaws, which you don't file with the state, which effectively are the rules for how you operate the entity. And then most states require a statement of information filed at least annually to let them know if there's any changes in the ownership structure. On the other hand, for an LLC, you get articles of organization versus the incorporation, where you're organizing the LLC. You're going to get an operating agreement, which is not filed with the state, which tells you again how you run your entity, and then you'll have the same statement of information requirement on an annual basis to, of course, let the state know that there's been no changes to your address and the personnel that's involved in the company. That's all for this time. I realize this was a very high-level question and answer kind of session, so what I'm going to do is I'm going to say, ask me questions down below. I'm happy to get more technical. Again, this is entertainment value, not legal advice. You should always seek professionals. But if you have technical questions, I will answer them below. Unlike most of the people you see on social media, I see a tremendous amount of this on a daily basis by what I do. And I also happen to be an attorney and a broker, and I own several companies myself. So ask the questions. We'll see you next week. See you in the comments.